When it comes time for retirement, you may have saved money in a 401k or a Roth IRA, but for a lot of people, there are still a lot of questions that need answering when it comes to taxes, withdrawals, and other aspects of those retirement accounts. And the man with those answers is Davis Garrison the Third from Preservation Financial. Davis, always a pleasure to see you here on Friday.
Thanks for having me.
You have a gentleman that you keep in contact with, Ed Slott, and we've talked about him over the years, but remind us who Ed is and talk about something he brought to your attention just recently.
Ed Slott is an incredible resource that we have and that your viewing audience can have also.
Right.
And as an example of it, I have a mailbag issue from April 18th, so it's not dated.
Right.
A gentleman wrote in a question to him. And what the question was is, I'm 70 years old, will be 70 and a half in July, which is the time for required minimum distributions to start. I retired in 2014. I have a 401k account consisting of highly appreciated stocks and cash from my former employer. Although the majority of the money is pre-tax, I do have a small portion of money that is an in-plan Roth, which was established in 2016. Okay, so this gentleman sent this question in because he had gotten information in error from the plan administrator.
Okay.
Which, if you can't go with the plan administrator, where are you going to go? But Ed Slott is recognized worldwide as an expert for retirement plans, IRAs, that type of thing. And what Ed said was, the gentleman also asked about net unrealized appreciation, which is a difficult topic, but it covers highly appreciated stock in retirement plans. And there are several large corporations around here that give their employees the opportunity.
It's part of your 401k plan.
Yes, it's called an ESOP, an employee stock ownership plan. And so stock, Eastman, companies like that can appreciate very drastically over a 30 to 40 year career with the employer. So the advantage of net unrealized appreciation, and that's a mouthful, I understand, is that the gains in the stock can be treated as capital gains, which is a lower tax rate than ordinary income tax.
And you want that lower tax rate.
Which you definitely want. And so Mr. Slott identified that the administrator was mistaken and came right out, it's on the internet, came right out and said the administrator is mistaken. And he went on to explain, with net unrealized appreciation, you can still take it, but it has to follow a triggering event, which is death, disability, separation from service, or age 59 and a half. And this gentleman at age 70, he doesn't have a triggering event to fall back on. But he outlines, and I won't go into it because it's very complex, but he outlines ways that this gentleman can minimize the taxation of this stock when it comes to him redeeming it or his beneficiaries redeeming it.
And you have some information you want to share too. You got a booklet there that you want to show, but you have the answers to these questions. I know these folks, a lot of our viewers out there have questions about their retirement accounts. You have the answers.
Yes, something like this, net unrealized appreciation, is what's called an advanced markets directive. And the companies that we represent, 42 different companies, send us explanations that we can use to enhance the services that we provide to people. And we can speak with authority because of this type of publication.
All right. Folks, I encourage you, if you've got questions, please give him a call. Go by and see them there. They're at Preservation Financial Group, right there on Sunset Drive, right here in Johnson City. There's the number right there. They have a website as well. Make an appointment. Go by and see them today.